to mywealth.com. I'm Bob O'Brien, the head instructor with the courses. Welcome to the blog for the day. The employment report tomorrow, the non-farm payroll report, and its effect on the markets. I have to be honest, I've been watching the market lately, and the last couple of weeks, it's really been off the charts. I mean, the stock market has been doing phenomenal. It's slowed down a little bit, this week and so forth. And was thinking that, probably going to cool off a lot with the employment report out tomorrow. Now, nobody knows for certain what's going to happen in the market, but you just look at everything coming together, and there was some pre-employment reports that were out today, and things look very, very good for the stock market and markets in general, at least in the short term.
Be certain to check out the written blog at www.mywealth.com/blog. I got a lot of great links for you in there. It's also the question of the week, so you definitely want to take a shot at that. Now, a lot of people have tried to call this market and economy a W, a V, and perhaps even an M, based upon the size. It's obviously coming down, going back up, or just going up, or whatever the case may be. And this, of course, is how it would look on a chart. I personally think right now that it's an IV, and a little bit of a pun intended, and it's an inflationary V, because we're seeing a lot of the driving force is because of the inflation that's down the road. Now, this bull market started when Big Ben Bernanke made it clear that we are going to print our way out of it. In other words, print money to get out of this severe recession. So we really went from a Greenspan put to the Bernanke printing press put. So what does this really mean for stocks? Well, we're probably going to see stocks continue to go higher through the third quarter, with all the money from asset allocation moving in other words, more people moving from bonds into stocks, and also just the inflationary trade, people continuing to trade this inflationary environment that they see coming. How about the dollar? The dollar will continue to weaken, and only when we see a rise in interest rates, or perhaps we're going to see the dollar strengthen. And oil really has calmed down a bit significantly. And I wrote a blog a couple of months ago, saying how oil would cool off, and it did. And now it's actually gone back over that $70 level. But oil's just interesting to watch in terms of how it just is able to sustain a price where it doesn't destroy the economies or the stock market for that matter. But yet that trend should continue to go up. And as far as the yield curve, and this is something really the banks, it's one of the only things the banks have got going for it right now. And the banks have rallied this week, and that should continue. So the yield curve should pretty much stay as it is, which is a very attractive yield curve for the economy. So these are the type of things we like to go through in our courses. Make sure you check them out. Don't wait. Get educated. Take control of your investing. And get to www.mywealth.com.
Now, I don't claim to be Nostradamus or anything like that, but these are the things that you want to watch. Even if you're just using a balanced fund in a 401k or an IRA, you want to make certain you know what's going on in the market. So, again, a little knowledge can be dangerous. Do your own homework if you're doing some trading. These are just my own views, and not everyone's cut out to be a trader. And anyone who's gone through our Investing 101 course knows exactly what I'm talking about. So if you haven't taken that course, make certain that you check it out. You're missing out on something really special. Have a great day.